Gold dropped 4.5% with safe haven flows rushing out. Is this pullback just getting started, or is this the perfect dip to buy? And what's the next big driver for gold? Find out now on As Good as Gold. Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. Over the past week, gold has taken a pretty steady hit. The easing tensions in the Middle East sparked a quick exit from safe haven buying, and the strong rally in US stocks has made gold less attractive. That said, diverging views within the Fed, tariff-related uncertainty, and a softer US dollar continue to offer support. And looking ahead, besides trade talks, keep an eye on this week's US core PCE inflation data and next week's jobs report. They could give us a clearer picture of where interest rates are headed and shake up gold trading. Looking at the gold against US dollar daily chart, the yellow metal has been mostly trending down, closing lower 6 out of the last 7 trading days. Since mid-June's peak, it's pulled back nearly 4.5%. Buyers did step in around $33.80, but real support showed up only when prices hit the 50-day moving average. Gold is now trading back within the $32.80 to $33.80 consolidation range, and if today's close holds above the 50-day MA, $33.80 would be a key resistance to watch. While on the flip side, $32.80 looks like the zone where buyers might jump back in. And now, what's driving this pullback? Obviously, the quick cool-off in Middle East tensions, which led traders to ditch their geopolitical hedges. And actually, many traders had already priced the conflict as a short-term noise rather than a sustained driver. So when the US stepped in, it just confirmed their bets, pushing gold even lower. And now, the big questions on everyone's mind would be, gold's mean reversion seems somehow inevitable, but where's the bottom? And is this a dip to short or a dip to buy? While the easing geopolitical risk and improved risk appetite are headwinds for gold right now, I'm personally watching $32.80 closely and leaning towards seeing this as a buying opportunity. Why do I think gold can hold this high ground? Well, basically two main reasons. The first one would be the Fed's message is getting quite mixed. Powell stuck to his wait-and-see script during his recent testimony, flagging uncertainty around tariffs' impact on inflation and keeping an eye on unemployment. But other Fed officials like Williams and even ex-Hawk Bowman are sounding more dovish, with Bowman even hinting a July rate cut could happen. There's no denying some political factors might be at play here. And even though the Fed voted unanimously to hold rates last week, beneath the surface, there's a bigger split on where policy is headed. Markets are already pricing in rate cuts for September and December, and that kind of uncertainty keeps gold's safe haven appeal alive. And second, the 90-day tariff pause for most US trading partners ends July 9, but trade talks haven't gone really smoothly. For example, US-Japan negotiations hit a dead end after canceling key 2+2 security talks. The European Union is still grappling with non-trade barriers like digital taxes and agriculture, and Vietnam's talks with the US have some hidden tensions, majorly due to its dependency on China-linked supply chains. So with time running out, a big trade deal among the major players looks quite tough. Trump might bring back his raise tariffs first and negotiate later tactic. Will market have gotten better at handling this kind of swings in tariff stance? Worries about the dollar's credibility and short-term volatility could still push gold buying. Add in a softer dollar and falling real yields, and gold's opportunity cost drops, making it more attractive. Plus, central banks are still buying gold as part of the de-dollarization trend, providing a steady price fall. So in short, gold's under pressure and testing support near the 50-day moving average. East geopolitical risk and hot stock markets have caused safe haven flows to dry up, but Fed policy and trade uncertainties are keeping a floor under prices. I'm personally leaning towards buying the dip for now, but if gold falls below $32.80, I'll definitely rethink my stance. And coming up, Friday's core PCE inflation report is key. The market expects a slight 0.1% monthly rise and 2.6% year-on-year. a bit hotter than last month, but the 3 months annualized rate could drop to around 1.6%. So any small inflation bump might weigh on gold a bit, but this report is just part of the picture. Next week's job data will be crucial too. Powell says the economy and job market look strong, but slipping consumer confidence and rising jobless claim tell another story. So if the jobs report confirms those cracks in the labor market and inflation stays steady while housing remains relatively weak, the Fed could go even more dovish in July, setting up a September rate cut, which would be a push for gold bulls. So that's pretty much all for this week. If this video is helpful, don't forget to subscribe, like, and spread the love. If you have any ideas on how the upcoming data and events might impact gold trading, drop a comment below and let's chat about it. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!